Hi everyone and welcome back to Grumpy Monkey Trading. My name is Michael. On the show today we're doing another BananaRama where we take a look at Cramer's Mad Money Lightning Round stocks and perform a bit of stock charting analysis based on his comments. This is going to be more of audio, so you don't see me as much, but we'll still have all the good stock charting analysis. And with that, let's start the show. Alright, our first stock up is TASR. Cramer says this stock is too cheap, TASR. Now we're in a bear market. Remember, we're in a bear market where stocks that aren't supported by big dividends and have low valuations will go down if their earnings aren't on fire. I think TASR is an inexpensive stock. Well, I think the stock community would tend to agree with you. The investment community, as TASR has suffered many declines in the last few months, 6 months. Basically, if you look in a longer version chart, you can see that it made a classic head and shoulders pattern where it's now well off that shoulder. Certainly it is depressed. If we look at the chart itself, we're in a downwards wedge pattern here and have done a couple touches. So we've done top, bottom, top, bottom, top. Now we're looking to see whether we have a breakout or whether we're going to fall back for another touch or potentially a little curl to attack it again. On a positive side, we do have a push through of the upper resistance line in the RSI, and we're looking to touch back on that. And the stochastics look like they are still, they're edging towards overbought territory, but they're not quite there yet. So if there was a volume push through, that would be great. And then it would probably settle back on this line on the other side. And that would be you would be looking at that point for an entry point where it took off again with some volume. So TASR, I think, is one that you really want to pay attention to because it is getting to the point of making a decision on which direction it wants to go. Lockheed Martin. Cramer says you want to be in Lockheed Martin because both Democrats and Republicans favor higher spending on defense, and Lockheed Martin's got tons of orders coming in from overseas, so it's an inexpensive stock. Not certainly based on the share price, which is $211.94 presently, but more overall in terms of like the revenue and everything. As a stock, though, it's more been on the sort of stagnating side lately, just in a lightly upwards trend overall for the past 6 months, and a more immediate downtrend with the rest of the market over the last couple months. So I'm not expecting any sort of big movements for Lockheed Martin on the positive side in the short term. I would expect that it's probably going to try and challenge this upper resistance line in the near term, probably in the next month or so. If it can get through that, that would be a nice run up to probably 217, 218. That's the next upper resistance line. But really, to get a full-on breakout, it would need to break out of this 220, this sort of double top here. On the downside is that we established this lower support line. That's kind of our maximum support, and we rebounded nicely from that right after. So that's sort of our maximum downside. But realistically, if you're buying some shares here, you're looking at the dividend and you're saying that, hey, there's probably opportunities for this once the election happens with some of the foreign policy concerns. Skechers, SKX. Cramer says Skechers has come down a great deal from where it was, but at the same time, remember, the stock is up huge, so I say let's wait and see the quarter. In time, we can buy some after we see the results of the quarter. So obviously, we had this huge drop-off here in November, where we lost a significant portion of the value, about 20% or so, and then since has been really in a consolidation period. So we've been bouncing off of the symmetrical triangle pattern, so higher lows and lower highs, and we're looking for what's going to be our earnings results that come out on February 10th, so this Wednesday, to really move us. So if we get positive results, I could see us certainly challenging this line and busting out to maybe find some other resistance points. Perhaps something like this would be a resistance point, or on the downside, you could challenge some of the old support lines. If we get sort of moot results or results that sort of fall in line with what we're expecting, then we'll probably just bounce around in this channel here and to pop out in a couple months when probably things start to coalesce around a specific idea. So that would be what I would say is the high side right now, which is still pretty significant, and let's hope for all the people invested in it currently that we can get there. All right, our last one for this evening is BP. Kramer says, I'm not recommending any fossil fuel stocks. The company seems very committed to the dividend. Mr. Dudley doing the best he can, but you know what? These stocks are too hard. I got so many great stocks that are at their 52-week lows. I don't want to reach down the food chain to a company that actually had a very disappointing quarter. There's no way we can say any other way to describe that BP quarter, which is true. I mean, it's pretty scary what's going on with oil right now. And certainly OPEC doesn't really seem to be wanting to do anything to improve that situation. So weird and dodgy times for oil. With BP, though, we can kind of see that we're at least in a stabilization period. All these support and resistance lines that I've drawn, you can see that they're relatively straight. So we just have very clearly defined support and resistance marks that we're going to kind of bounce between until I think we really get more clarity on what's happening with the oil market. Obviously, it can't get too much lower in terms of the price of oil, but the prolonged price of oil in a depressed state is going to continue to impact these companies over and over, particularly as they turn off the tap on some of their investments. So we can see on the upside that we have this sort of upper boundary at 35 and a lower one at 28. If we were to go lower than this kind of 28 one, maybe a little 28 and a quarter, then we would be sort of breaking out of this pattern that we have defined. But right now we're kind of oscillating between the 32 and 30. The nice thing, as Kramer pointed out, is this yield of 7.81%, which is very healthy for a stock. So if they're committed to keeping that, then this could be sort of just a long-term hold while you wait for oil to improve. That is it for me today. I hope you enjoyed the show. I'll get back to more of a normal show next week. Please like and subscribe the video if you enjoyed it. Please share it as well. And I will see you again soon.